weekend all. Ira Epstein of Linn and Associates with your weekend edition of your SPDR ETF wrap-up for this Friday, the 12th of March, 2021. I have a favor to ask of you. If you like these videos, do me a favor. If you're watching us on YouTube, and the vast majority do, why not just click subscribe and give me a like if you like it. If you have questions, write them to me. I try to get to them as often as I can and write back what the government allows me to do. Remember, I'm a registered broker. I can't just go out to the general public and say, buy here, sell there. It doesn't work that way as a commodity broker. So I pay attention to the rules. This is an interesting time. The market has adjusted in large part to the concept that interest rates are going higher. I'm not using the word adjusting. Adjusted. Today's big rally in the S&P and the Dow, as you went back over the 162.5, 163 zones, you even were going up from there, in the 10-year note tells you that. Otherwise, the market would say, oh, look what's going on. We're up here. We're going to crash again. That's not going on. That's a change. You've got to pay attention to changes. That's one of them. The FOMC meeting with Chair Powell having a press conference is this week. So as that comes up, you know he's going to be asked questions by the reporters. I wish I was there to say, okay, folks, look what's going on with the 10-year, with the mortgage rates. How far are you going to let that run, or are you comfortable that it's easing itself higher? We'll find out his answer. But that will affect foreign currency trade for the week in a big way. Bank of England's yet to come out. We just saw the European Central Bank come out with what they're doing. Canada's having a better time in employment. So you got to pay attention to all that. So as we take a look at tech, my question is, at what point are people going to realize, yes, we're post-COVID? I think that's where we're at, and that's what I've been saying because of how many vaccines are getting out daily. It's just monstrous. We're doing a phenomenal job in America of it. And at what point do you say, okay, we've sold off the tech because of that, but at what point do we start looking at these companies and saying they're okay? Let's see if we can get a handle on that. In the tech sector, you got lower highs, lower lows. That's bearish. The market is fighting its battle where? Right where I often tell you. The neutral number on a chart. On a daily, it's the 18-day average. On a weekly, it's the 18-week. And you'll see this often. It's how these markets come back here. In the past, when we got finally back over this, and this was May of last year, this market just kept basically edging itself higher. Is this going to be a replay? That's the question I have. As we take a look at the Bollinger Bands, we had run them in a sign of strength, then backed off on them. We're pretty neutral then on this market. And momentum, which had what we call an embedded reading, and the market certainly ran with it to the new highs. That's what I'd expect as you get them. In other words, continuing to pump ahead. When you lose it, it often means you're going to get back to the 18-week average to regroup. You tell me what you did. You regrouped right at that number, and that's what you're doing. A sign this is over for the near term would be taking out 135.18, but that would not be a bullish sign. It would just break the pattern of lower highs, lower lows. A resumption to the downside comes in if you start probing through last week's low, which is 124.71, and it could lead you all the way down here. Momentum down, bias up, trend down. You're fighting right a battle there. In PAVE, I've been sticking my neck out on this one because I've been saying to you since I brought it on that I thought that this was one of those events where infrastructure is going to become a name game, and that's the market's doing that. It's running. Now, you're up to the upper Bollinger Band. The market closed well over it at 24.74, 24.39 is that number. Again, only 5% of the time do you stay over it. Are we embedded? We are. So on pullbacks, I think the pros are going to be willing buyers, nice buyers, but I'm not thinking they're going to be reaching for it up there unless out in left field somebody in Congress says, okay, we're on to the infrastructure bill and here, blah, blah, blah. You know what I'm getting at. In XLI, the industrial sector, how could you not be friendly? The industrials, given what you're reading as to factories humming, people going back to work, masks no longer being worn in Texas and Wyoming and other states. Okay, restaurants filling again. Well, industry's starting to hum, and you're seeing that. But again, do you buy over the upper Bollinger Band? How much of this got caked in with this embedded reading? I am not bearish. That is not what I'm saying. But I'm warning, buying over Bollinger Bands is generally not the best play you can make. In XLE, the energy, I've been bullish and still am very bullish. How could you not be? Let me get back to this. How could you not be, given OPEC has won the day? Rightly so. They figured out U.S. producers. They figured out the CapEx. Bloomberg had a phenomenal set of graphs this week about CapEx in the U.S. and around the world, what's being spent. And in the U.S., what OPEC has figured out properly was that these big oil companies, on that big break we saw, they wanted to get rid of debt on their balance sheet, and it was time to give back because they couldn't give back money to the investors. That's what they're at work at. Permian Basin oil, if you read today in Reuters, Bloomberg, there's different articles on it, runs approximately on average $33 to $35 a barrel. You're trading at 65 in WTI on the April contract, so approximately a $30 lock-in. That'll bring out the independent producers because they don't have to worry so much about giving money back to the big general public investors that own the listed companies. That's what I'm looking for to happen, but there's not enough of that to break the oil price. There's enough for it to mute it at some point, but with the world coming out of COVID, I don't know where the high is, but I don't think we've seen it. So I'm still friendly to that, but again, would I ever tell a trader to buy over a Bollinger Band? If I do, slap me across the face. I don't care if it ends up there. That's not the way that I think you do it. Only 5% of the time do you stay over it. They didn't build Vegas on the house being a winner. Even that for the house isn't enough. You know that. They're bigger winners than that in many games. Others, they're not. QQQ, higher high, lower low. Was that it? It might have been. It just might have been that the market has sold off in that particular index, and now what we call this post-COVID, pre-COVID, all the way here for a year. Post-COVID doesn't mean a crash. It's just a rotation out into other things. Do you honestly think these FANG stocks are that bad? I don't. EFA, the emerging markets. Well, the problem for them is U.S. interest rates. If the dollar keeps rising and U.S. rates keep rising, that becomes the problem. The daily charts look a lot worse than this. These look good. This chart is keeping you, how do I say, attuned to the fact that you're in an uptrend. It is overbought. You were calling for a correction when you dropped here of possibly getting back to the 18-week average of closes. You made your run at it. Weekly charts aren't like daily charts. They don't have to quite hit it. They have to make a run at it. Daily charts, I have a whole different set of rules because it's each day that you're looking at it for traps and what's going on. It's a slicker type of trade. This is a slower type of trade, but it is still bullish. Target is still 77.53, but it is overbought in this market. On the gold market, I think you're nearing a zone of value. Between here and that 100-day average is my guess that you're going to find your legs in this market. You're oversold. In between there, I'm not saying you're going to run up all the way like you were here, but I'm wondering if the bears are on borrowed time right now. In the gold miners, on the weekly chart, you have to look and see if you lose the embedded reading. You're at 1986. If you're up this week, you should. And if you do, then I think you're going back to the 34.78 level. So that's the difference between, no, I'm not saying the buy. I'm saying this was the area to cover shorts. What do I tell you the first time you hit a Bollinger Band and a 100-day average, or a Bollinger Band and a 200-day? That's where the pros come out. It's too big of a number for them to hang around, and that's what they've done for the past 2 weeks. SLV. I like silver because I think it's used in everything in industry. So as such, I understand the pullback. I understand that the Reddit people drove this market to possibly levels it should not have gone up to, and silver itself carried SLV with it. But now you're at a zone where I think the market's trying to get its footing. That's the right word that I'll use. TLT, regardless of what happens, if you were sitting next to me, I'd be nudging you going, it's time to cover short positions. Why? You got the FOMC meeting. You're now down to the 200-day average with the Bollinger Band. I'm not bullish. There's a difference as to how far you want to press it going into that meeting. You think the Fed isn't watching this? FXE, you got to the lower band. What do you do the first time you hit a Bollinger Band on the upside or downside? In unison. You got it. If one is short, that's where they're covering. You're not trending. You're oversold. You fell down pretty hard. Jets. I think I've been pretty bullish on airlines and airline areas like this particular spider, and look at how ETF actually coming up here. Now you're at, just like I said on TLT, this is probably a good zone to be taking something off the table. 200-day average, upper Bollinger Band. The market checked out, if you can see here. There's the 100. You went up a bit, came down to check it out, which it did, and now it's checking out the 200-day. Eventually, I think it's going a lot higher than this. I'm a bettor that things are getting back to normal, and not in a slower way either. I think that spring, summer, people want to travel. So I'm betting the airlines are going to be a surprise to everybody. And last, this is DBA. This is the Agriculture Grain Fund. We're sort of in a pause in the grains right now. South American crops are going to come on. U.S. planting season's right here. Yeah, it's right here in the South. They'll be planting already, and we'll be seeing what goes on and how much they're going to plant. So a pause, yeah. I look for support back at the 200-day average. You're still embedded. It hasn't given up its bullishness. You know, each weekday, Monday through Friday, I cover for you. At about 8:40, I start recording on what the spiders and ETFs are doing in real time. And in that time, what I'm doing is trying to give you the short, swing trades. Now, swing isn't a day trade. It's just carrying a trade from day to day. And then on Saturdays and Fridays, like I just posted for the weekend, the Saturday videos, I've already done them. And I give you an idea of the long-term trades, because a lot of you want that. You don't want to be bothered every day with what the market's doing. You want the bigger picture. That's all included. So 5 videos on the dailies, 1 on the weekly, and during the day I'll mix them. These are just some of the different markets I'm covering. How do you get it? You go to our website under the word research at the top. It explains all this. You can sign up. You can quit whenever you want. Support us. I'm Ira Epstein. By the way, you're supporting yourself. Maybe you get some ideas there. That's, by the way, where I can say, I want you to buy here. I want you to sell there. That's the track record, if you will, for what I do. I don't post a record. I let you look at trade by trade and you decide, gee, this guy does track the markets, or he doesn't. I'm Ira Epstein. You have a good day.